You're listening to Environmentally Speaking, a weekly podcast diving into legal matters surrounding the environment, public utilities, energy, zoning, and permitting laws in Rhode Island and the surrounding areas. With your host, Marissa Desitel.
Welcome, everybody, to this week's episode of Environmentally Speaking.
Hi, everyone. I'm Marissa Desitel, an environmental attorney in Rhode Island.
And I'm Clarice, who has taken a week off and barely remembers how to start this podcast.
Well, you did a good job.
Thank you. Welcome, everybody. This week, we are excited to welcome a special guest. We have Mark Garren, who is joining us today. He is a senior director of Collateral Risk Services at a top 15 financial institution with a national commercial lending footprint. He's going to explain what all of that is in a couple of minutes. In this position, he's responsible for the oversight of real estate appraisal, environmental risk assessment, flood insurance, and construction management function. He is, Mark, would you say LEED accredited or do you say LEED? What's
Just
the
lead accredited?
lead? All right, wrong on both. This is why we have Mark.
Now, lead was your third choice, though.
That's right. He is LEED accredited professional, certified regulatory compliance manager. He's a member of the Royal Institute of Chartered Surveyors in a commercial property practice and a state designated real estate appraisal trainee. Hi, Mark. Thanks for joining us.
No problem. Thank you, Clarice, and thank you for Marissa for the invitation. Happy to talk with you today. As Clarice said a minute ago, I'm responsible for the collateral risk function at a national, or I should say a regional lender, but we do have a national commercial lending footprint. I'm generally responsible for the, as Clarice just said, so the real estate appraisal function, environmental risk assessment function, construction risk management if we're doing some construction lending, flood insurance function, and a couple other things that you don't care about for the purposes of today's discussion. I thought it might be might get something out of, might be valuable to sort of discuss at a very, very high level. You know, if you're coming to a commercial lender with a real estate secured deal, or you're representing, a client that's coming to the bank, they need to get financing, whether or not that's acquisition financing or maybe refinancing another bank's debt, financing somebody else out, we're going to be the takeout lender. Sort of the things in general that you would be dealing with are the questions that a bank should be asking in that context. Now, again, we're not talking about consumer lending, retail lending. We're not talking about single family, primary residence here. Yep. We're talking about industrial property, warehouses, retail, office, gas stations, senior living facilities, 5+ multifamily, things like that. And, properties like the one behind me in my background. I think it's important to acknowledge and recognize, when you're coming to a bank, when we're talking about these types of due diligence practices, it's quite consistent across banks. And the question, well, why is that? Well, it's consistent across banks because a lot of this stuff is driven by federal regulations, regardless of whether the bank's regulator is, the FDIC, the OCC, the Fed. Who is your prudential regulator? Well, they're all sort of singing from the same hymnal, so they're basically doing the same thing. Things may be a little bit more or less prescriptive depending on what aspect of due diligence that you're talking about. Just for example, appraisal and flood insurance specifically, very, very prescriptive regulatory requirements. So I don't care what bank you're going to, you're pretty much doing the same exact thing or should be doing the exact same thing. When you're talking about environmental, though, or maybe you're talking about construction, there's regulatory guidance out there that banks are supposed to follow, but the guidance is certainly not as prescriptive as appraisal and flood insurance. So it does afford banks a little bit more flexibility to do different things on a transactional basis. So,
Mark, you mentioned that's an excellent lead-in. Thank you for that. For the audience's sake, Mark and I have been working together for, at least 15 years at this point. And the reason that Mark is such a relevant guest on the show is, in terms of environmental issues, they customarily come up in the context of commercial real estate transaction. So that's when folks like me and my office would get a call from a client or a lending institution with a question about some environmental risk that's inherent in the transaction. And Mark's perspective on this issue, I think, is so important, because whether or not you're a practicing attorney, you could also be someone that's trying to get financing, someone that's trying to sell a property. It matters what the lending institution asks you to do. You have to comply with what the lending institution is telling you that you have to undertake. And I think a lot of people don't necessarily understand that. What you just said about how there is a federal regime in place, essentially, that dictates what the bank has to require. So it's not like you can shop around and get a better environmental deal with a different bank. You all are subject to the same type of regulation. Did I add anything helpful to what you already said by that?
No, I think
Me, yeah.
that's a very good perspective.
Yeah.
Again, maybe to use a more concrete example, you have a $3 million loan. It's acquisition prospective loan. It's acquisition financing, and you're going to be trying to acquire, let's just say, the building behind me. Most banks are going to require, based on that property type, like a phase one.
What's a phase one?
So basically ASTM phase one standard, so the environmental due diligence standard that's pretty much commonplace across the industry and has been. I think I'm dating myself a little bit, I apologize, but I think the first phase one standard probably promulgated in, I'll say, 92-ish. And then there's also a counterpart to that. It's called the ASTM transaction screen standard. And I think the way you can really sort of think of the two of them in comparison, the TSA is more of like a phase one light. Okay. They do a lot of same things. And again, there's a flexibility, same thing, with how banks, there's the ASTM standard, but I know a lot of my counterparts at other financial institutions, they may call their internal standard, like a phase one plus, because they may do other things as sort of standard practice. Just for example, the phase one standard has additional, like, optional things that you could do, like asbestos, lead paint, lead in drinking water. There's a host of them. There's like 7 or 8 of them. That's pretty much standard, in the ASTM practice. That says, here's the normal things that you can do. Well, here's the, additional items of concern. Well, we generally speaking would incorporate asbestos into all of our phase ones, or the requests that we make to our vendors. But lead paint, let's say, well, you're not going to be asking about lead paint for your typical like retail or office building. But if you're doing multifamily lending, well, yeah, you are going to be asking your vendor to incorporate lead paint, into that phase one standard, into that particular scope of work for that particular job. That doesn't mean that they're necessarily actually doing sampling, doing the lead paint swabs or anything like that. But they may be asking the property owner, the borrower, well, what do you have for certificates of compliance? What do you have for the result of any prior lead surveys? What do you have for results of any prior abatement actions? Those types of things. But again, so it's really sort of case by case. It's sort of like a menu to say, okay, well, here's the type of property I'm dealing with. Here's the age of the property. Generally speaking, if you're post 1980, you're really not as worried about asbestos and lead paint, because those things were, phased out in the mid to late 70s. But still, it's sort of a menu. You're looking at, okay, what's my loan amount? What's my property type? What are the issues that, that are going to be identified with this scenario? And you're trying to match or craft your due diligence that you're requesting your vendor to do, to address the concerns at issue.
When you say vendor, what do you mean by that?
So in the environmental context, we're talking about your environmental consultant, something which is defined as a quote unquote environmental professional under the ASTM standard. So technically, an environmental, 99 times out of 100, an environmental professional is going to be doing the phase one. There's some whole sort of statutory regime on a federal level. If you do a phase one, there's liability exemptions and whatnot. I can let Marissa speak to that if she wants to. It's probably more detailed than people want.
And we can put the audience to sleep immediately with that conversation.
Exactly. But where the rubber hits the road from a practical, real-life perspective, an environmental professional is going to be doing a phase one. Now, if we're talking about the transaction screen, again, I sort of refer to that as the phase one light. That does not need to be done by an environmental professional. That is a defined term under the phase one standard. And, that comes down to, education or number of years experience. There's several different criteria. But reality is, from a bank's perspective, you're not, I don't want to say you're necessarily using mom and shops, because some of those people do the best work. So, I know for us, we probably have a good 40, 45 pre-approved vendors on our quote unquote list. They do run, again, it's a geography issue. And if you have a regional or national lending footprint, you need to have enough vendors to cover your various markets.
Yep.
But by the same token, do I have anybody that could, that's in Butte, Montana? No. And so again, it's, you try to have that mix. I think we have a good mix of national vendors, regional vendors, and again, some guys that, that work out of their house, the mom and pop shops. Because again, some of those people, they know, they may only work in a certain, limited geography, but you know what? They know that geography.
And they might have looked at the site previously as part of their professional career.
Yeah, but that's a double-edged sword. We're given, and that's something I actually probably should have mentioned also, compared to, say, the appraisal field, okay? A bank cannot accept a borrower-supplied appraisal. That's strictly prohibited by the regulator.
Yeah, right, because it could be biased.
Exactly. But in the environmental realm, where, again, things are not as prescriptive as they are with appraisal, we get borrower-supplied reports constantly, all the time.
Yep.
And like anything else in life, you have good lawyers, bad lawyers, good doctors, bad doctors, good architects, bad architects. Well, it's the same thing in the environmental industry. It's the same thing in the appraisal industry. So, those borrower supplied reports, some of them are fantastic. They answer all your questions. You don't have to order anything new. Good to go. Other instances, they raise more questions than answers.
Mm-hmm.
I always take the mindset that we should be more willing to accept an existing report that a borrower had commissioned prior to their acquisition of the property versus a report that was done on behalf of a seller who was trying to get rid of their property.
Mm-hmm. That's right.
Because in that context, the bank and the borrower at the time should have been on the same side of the fence, because you want to identify issues and you don't want somebody else's problem to become your problem.
Yep. And for those listeners that still aren't quite sure how this phase one review fits in, I think the easiest way to explain it is the lending institution is, by virtue of lending money, taking on a risk and a liability that this phase one review and report provides the lender with an understanding of what those risks and liabilities are, number one. Number two, if they want to lend on the particular property, if the risks are too great, then the bank can say, geez, forget it, we're out. And number three, if there's a way to remediate or cover the risk associated with the particular environmental issue associated with the property.
Yeah, and identify issues that you may be able to flush out a little better by taking like a next step. Whether you may be walking across a property and you actually see old monitoring wells. Well, where did these come from? No idea who put them in. You don't know how old they are. Mm-hmm. You assume they're still viable. But there may be issues on the property. So that next scope, that the end of the phase one may recommend, hey, we should sample these groundwater wells, these existing groundwater wells. Say there aren't any wells on the property, but you have a property like the one behind me. That's sort of automatic phase two. That's, if you're going to be lending on a property like the one behind me, you're going to want some subsurface data. Now, we're in 2023, so you would assume that this property behind me has been investigated quite comprehensively. You'd be surprised. Sometimes, it amazes me that, properties, like I said, like the one behind me.
Yeah, what is the property behind you?
Huh?
what is the property behind you for those that aren't watching us on YouTube?
That is the former Draper Loom Works. I'm not going to say where it is. It's actually doesn't exist anymore. It was actually demolished in the summer of 2022. But at one point in time, back in the day, it was the largest manufacturer of cotton and woolen looms in the world.
So for listeners, it just looks like a very large mill. It looks like there's a lake or water body on one side, a field on the other side, and a farm, or not farm, a forest wooded area in the back. It is a big mill. It's kind of in an L shape. So from what I'm hearing, phase 1 is examine the property, figure out what's going on,
superficially examine the property.
So it's kind of get eyes on it. Is it worth putting money in? Is there an issue? Is there something that can be done to fix the issue?
Or better flush out the issue.
Okay. What happens next?
Well, then you got to determine how big the issue is. And that, I think, is another misconception. Maybe I should take a little bit of step back. The bank will never lend on a dirty property. That's not true. I've been doing this for a while. If we were talking, 1992, 1993, banks were were much more leery of potentially contaminated property than they are in 2023. We lend on quote unquote dirty property, all the time, just like I know a lot of my, brethren across the industry do. The question becomes, well, what's the problem? How extensive is it? Have you actually defined the scope and extent? What's it going to cost? Is that cost viable or not? And who's paying for it?
And when you say dirty property, are we talking like Superfund site? Or
I guess
Marissa,
that's
would you want to hop
very
in on dirty property, that definition?
Sure. I mean, Mark knows the answer to this as well, but yes, it could be a Superfund property. It could also be a property that's not as contaminated as something that's listed on Superfund. And I don't know, the question that I have in my mind is there a threshold or written criteria that the industry uses to determine whether they're going to lend on a particular property? Or is it a narrative internal discussion and figuring it out based on experience and site-specific criteria?
It's the latter. Everything is case by case. Every property is different.
Yeah.
Now, again, getting back to the Superfund comment, I've been doing this for 25 years. I think I've dealt with an actual federal Superfund site twice. 20,000 properties that I've looked at. So that's not really the stuff that you're dealing with. On a day-to-day basis, you're dealing with, not U.S. EPA, you're dealing with Mass DEP, Illinois EPA, and actually EPA in Illinois is actually the state environmental agency, not the Fed. Florida DEP, you're dealing with the state environmental agencies 99.5% of the time.
I didn't know that. That's really interesting to me. I had assumed that there's so many contaminated properties nowadays that dealing with a Superfund property would just be run of the mill. No pun intended.
I've dealt with a few of them over the years. It doesn't come up. Actually, it's funny. It comes up, I don't want to say frequently, but when you are dealing with a Superfund site, it's usually an old DOD site.
Okay, Department of Defense.
It's an old Army base or something like that, where the property is conveyed with statutory liability exemptions and statutory indemnities for the property owner. So you're usually unless that, and again, old Army bases, they're hundreds and thousands of acres. Maybe a Superfund site that due to some dumping or something that was going on, which was 2 miles away. It's still part of the Army base, the former Army base, but it's nothing to do with the property that you're lending on. So yeah, we've had a handful of those over the years, but those are actually pretty simple, like I said, because of the statutory liability exemptions and indemnifications that you get from the federal government. that run with the land.
Yeah, it must be nice.
It's easy.
No, I mean, it must be nice to be the federal government, just exempting yourself.
Yeah.
Well, don't even get me started.
Yeah, we all know. I mean, having an indemnification, whether it's from the government, whether it's from a counterparty, a private, it's all fine and dandy until you go to actually try to execute on it.
That's right. And then all of a sudden, there's not enough money in escrow to deal with the remediation that's covered.
Or it takes you 2 years to get back to you, or what.
Yeah, right.
That's why I like to have, again, when you're dealing with sort of, we'll just call it more manageable, more sort of run-of-the-mill type issues. There's an area here, contaminated soil. There's an underground storage tank that we found. It's active, but it leaked. We got to take it out. We found, a couple of abandoned underground storage tanks. You just try to define the extent of contamination as best you can, so it's going to cost $200,000. So you think it's going to cost $400,000, and you set aside as part of the deal, that money is set aside, and you provide, give the borrower, and sometimes it's the seller, but you give that third party, 6 months, a year, 2 years, whatever it is, again, case by case, depending on what the extent of the problem is, but you give them some time to take care of the issue. And they submit their invoices, and they get paid out of the escrow that's been set up. Now, again, it's funny because a lot of people, I got a phase one, and it identified an issue. Well, when can we close? Well, you need to take that sort of next step to say, you have a problem, and Marissa's laughing because I'm sure she's running this issue all the time.
Yeah.
The phase one's not going to tell you like how bad it is. The phase one is going to tell you may have an issue here. You have something that you need to look into a little bit more. And whether that, again, my example before, let's sample some existing groundwater wells that we found while we were walking across the property, whether that's hiring a drilling company, get a drill rig out there, poke a bunch of holes, take a bunch of soil and groundwater samples. That stuff takes time.
Mm-hmm.
But that's what you need to do in order to identify how much is this going to cost. And sometimes you might do that initial quote unquote phase two. You put in, we'll just say, you advance a half dozen borings, you put in a half dozen groundwater monitoring wells, you sample them. Oh, now we actually found something. Now there might be a reporting obligation to a state environmental agency. That may just now have identified the problem. You still don't know what the extent is. So you may need to do yet another phase two to define the extent so you can now put a dollar amount on it.
Well, hold on a second. When you say another phase two, does that mean are you formally closing the first phase two and then starting it over again, or are you just continue? Oh,
so like my example a second ago, so you put in 6 borings, you put in 6 wells, okay, and one well comes back quote unquote hot, whatever the contaminant was that you were worried about and were measuring for, you identified it at concentrations that exceeded a reportable quantity for that particular state environmental agency. Okay, well now I got a problem. Is this the only spot on the whole property that is an issue? How far is this contamination migrated? Well, now you have to put in another 6 wells, let's say, to try to define what the extent is. Now you hope the initial phase 2 comes back clean, but that doesn't happen all the time.
Mark, what's the percentage, just a guesstimate here, what's the percentage of phase 1s that come back clean?
That's actually a good question. I would say, well, you got to remember, and again, this is not a knock against environmental consultants whatsoever, but they obviously have an incentive to be somewhat conservative.
Yep.
Because they're already familiar with the property. The idea being, well, if I recommend something, I'll be first in line to get that next phase of work.
Yes.
So the bank, we ask our consultants to provide a risk rating that we define in our contract, and to provide recommendations. But maybe the better answer to your question is we don't necessarily agree with those recommendations all the time.
Yep.
So the consultant may come back and say, we recommend phase 2. And that's going to cost, 12, 15 grand, let's just say. we may look at it, our internal reviewers, all of whom were environmental consultants at one time, all of whom did phase ones earlier in their career. They may say, yeah, this is too conservative. We're not going to require we're not going to tell our lending team, our sales folks, that they have to do this. We're basically changing the recommendation. From a lending perspective, we're not going to require this.
Okay.
But that happens also. So I might say, to throw out numbers, maybe a third of phase ones come back with some sort of recommendation. And I would say probably half of those we may not pass through to the business line. We'll basically tell the business line they don't have to do it.
That's a lot lower of a percentage than what I thought you were going to say. I thought it was going to be flipped, with 2/3 being you've got a problem, you got to proceed with sampling.
Well, but again, it gets back to sort of what is the scope of work. And again, I don't know if you're talking about transaction screen or you're talking about the phase one. Again, before I was mentioned, the asbestos, the lead paint, the lead in drinking water. Do you have an on-site drinking water well?
Yep.
Versus municipal sewer. Septic. A lot of, some states have sort of independent, septic inspection requirements if it's a, acquisition financing. So it sort of depends on, are you doing sort of the basic due diligence, or are you doing more of an enhanced due diligence to address sort of these other added issues that are implicated sort of on a case-by-case basis? And I'll use asbestos as an example, because this was actually I'll use asbestos and lead paint, because really within the last 2 weeks I became familiar with a couple of properties where there were issues. So we do a lot of construction lending. Sometimes we're not just doing ground up. We're financing the gut rehab of a 40, 50, 80-year-old building. There might be an old office building, you're converting it to residential, whatever it is. But you're gutting it down to the studs and you're rebuilding. Okay, fine. So what we see quite a bit is that the asbestos and lead paint sampling that goes into the budget, the construction budget, those inspections generally are usually quite cursory in nature and really not adequate. So commonly we'll say, as part of our phase one, that's some of the questions that we would be asking for this particular project. Okay, well, you're doing this gut rehab. Where's your asbestos survey? Where's your lead paint survey? And then our phase one vendor would tell the bank, hey, you have these issues, make sure these things have been factored in as a separate line item into your construction budget. You have the funds to do it. You just got to make sure the dollar amounts are adequate. So became aware of a couple, fortunately neither of these transactions were mine, but talking to other people in the industry, I became aware of them. One particular transaction was like a 30-story office building that they had to do a gut rehab on. The asbestos sampling survey prior to construction was very, very cursory in nature. They started opening up the walls and whatnot, and ended up at the end of the day having like a $4 million asbestos abatement cost that they did not anticipate. Because again, it's one of those things where you open up somebody's walking into a property, abandoned property, again, like the one behind me, and you see, everybody knows the asbestos where it's all hanging or, falling off the pipes that are along the ceiling and what. Nobody thinks about the stuff that's like inside the walls.
Yep.
I mean, again, if you're gut rehabbing right down to the studs, some building, well, you're opening up the walls. So that deal ended up just completely going sideways because they didn't account for that issue adequately up front.
Yep.
Another project where lead paint was sort of the same thing, where it was a gut rehab of an old mill into affordable housing, which, we see all the time. The work was all done. Certificate of occupancy was issued by the local municipality. People moved in and, end up on the front page, the top fold of the local newspaper that 4 kids have lead paint.
Oh my God.
Because they didn't abate what they should have abated, or they did a really messy job. So this, again, people think, asbestos, they haven't used asbestos or lead paint in 40 years, 45 years. It's not an issue. It's still an issue today. It's surprising, but it's still an issue today. It's the old, oh, when are we going to run out of underground storage tanks? Well, we still see underground storage tanks constantly. At some point you think you're not going to see them anymore, but you still get them.
Yeah.
And a lot of times they're abandoned and nobody knew about them because somebody's walking around the property and saying, well, wait a minute, what's that vent pipe over there? And you start poking around, you start poking into the sort of the back room of the basement and moving around a bunch of boxes and whatnot, and boom, oh, here's an old oil-fired furnace that hasn't been used in 30 years.
Yep.
That's the tank's still outside.
And where I'm making faces and noises over here when you're talking about lead paint and issues associated with asbestos abatement. But thank God these issues are being discovered, number one, for public health and safety, and number two, for the buyer. You want out of that deal unless there's available $40 million to somehow deal with, in your example, the asbestos issue. Yeah. But for the phase one,
that's a good point.
You're not finding these environmental health and safety issues. So they're actually like this fantastic.
It was we'll just a $20 million construction budget, and they had a line item in that construction budget for, we'll say, $250,000 for asbestos abatement. And guess what? It wasn't $250,000. It ended up being $4 million. So that blows your budget.
It really does.
Woo. Yeah, just the idea that oh my God, a nightmare.
I guess the takeaway is these issues take time. It's not something where you can come to the bank and say, 3 weeks before your P&S says that you're supposed to close, and can you give me financing? That's not the reality. There's a lot when you're talking about commercial property. You're talking about a longer lead time than I think the vast majority of people. Because again, the vast majority of people, what is their involvement with a bank when you're trying to get financing for real estate?
Residential.
It's your home. It's your home. It's a single family. That's most people's experience. I give them some of my, my last 3 paychecks, and I would get an appraisal done, and that takes a couple of weeks, and boom, boom, boom. It's relatively easy and simple. It's not like that with commercial property, and certainly not industrial property. There's a much longer lead time, and there's a lot of boxes that need to be checked when you're going through your due diligence practices. Now, you would think a lot of these things are, again, if it's acquisition financing, the borrower doesn't own the risk yet, doesn't own the liability yet. You would think that you should be on sort of the same team, on the same side. It's in his or her best interest to flush out these issues also. But sometimes you get but I'm getting a great deal. Well, why do you think you're getting a great deal?
Yeah.
So, people get emotional about real estate. They've always gotten emotional about real estate, and they always will get emotional about real estate. So, sometimes you're having to convey a message that the borrower doesn't want to hear. They really don't want to hear the message when they're providing you with a report that maybe they had engaged, or a report that the seller had handed them that says, everything's fine, there's no problem. And then you come back and say, that used to be a gas station.
Yep.
And that issue is not reflected anywhere in the report that was that the borrower handed to you. Again, I'm not saying that that's their fault. I'm certainly not saying that they're trying to put something over, on the bank. But the vast majority of borrowers, when they say, it's a phase one, those are the words on the title of this fat document that they have. It doesn't really mean anything to. They don't understand the process. They don't understand and they shouldn't. What goes into it. They just know that they need this because the bank asked me for it.
Right.
Well, again, if it's acquisition financing, sometimes, we're trying to protect you too.
Yep. Well, this ended up being a tutorial in ASTM and phase 1, phase 2 land.
Lots to digest.
I could talk about this for a long time, but I think 30 minutes is probably enough.
Well, thank you again, Mark. This was a whole introduction to things I did not know existed, frankly, this morning. And hopefully our listeners who may have dealt with this or heard of this or want
to get into the industry.
Who are going to be dealing with this in the future, this might be a good introduction to them. If you have any questions or comments about this, or if this is something that you've experienced, or as we do in Rhode Island, if you know somebody who's dealt with this, reach out to us.
And that's a huge, just one final thought on that, Clarissa. Maybe I'm giving a shameless plug to my friend for the last 15 years. But when you are, if you're contemplating the acquisition of a property, such as the one behind, having good counsel that knows what the hell they're doing is so crucially important. An attorney may be, hold themselves out as a real estate attorney. That doesn't necessarily mean that they're an environmental attorney. It's a whole different world than sort of your standard real estate stuff. It's, it is such a specialty. You really need people that know what they're doing when it comes to environmental.
Mark, I will take that shameless plug. Thank you.
No problem.
And follow up the shameless plug with the email. It is Marissa at desautelbrowning.com.
Yes.
Mark,
I don't know if you've listened to the podcast before, but this is every episode. Clarice, I love you.
I get it wrong
cannot get
every
the email
time.
correct. It's a thing. It's let me just do it. It's Marissa at desautelbrowning.com. Let us know if you have questions. I know, Mark, you're not providing your detailed employment information, but if anyone has any follow-up questions or has a deal that they need some help with or are looking for financing, please get in touch with me. Again, Marissa at desautelbrowning.com, and I'm happy to share your questions or other information directly with Mark.
Sounds good. Thank you very much.
Thanks, everybody.
Thank you for listening to this episode of Environmentally Speaking. If you're in need of an environmental attorney, we are here to help. Call us at 401-477-0023 or visit our website at www.desautellaw.com. That's www.desautellaw.com.